Everyone, this is Juan Sarmiento, and today is Friday, March the 25th. Okay, before I take a look at what we have, I'm going to consider a few candidates here. These are my candidates for today. I have looked at them, and you can look at them on your own. But let's go alphabetically through them. Apple, and make sure that we don't have any position on it. For example, Apple, I have owned it in the past, and we just have to make sure that there's nothing there. Apple, and that's an old version of it. Okay, so let's take a look at the chart first of all, and you see that the volatility, implied volatility, is around 29. Remember that we want it at 15. But the stock beat expectations, as you can see here, by a wide margin, so that's good. The stock has moved more than 10%. That's another plus sign. And the volatility is still quite a bit above the low. To verify that, go to the Trade tab and say All Products, and then look for Apple. Yes, it is there, and then scroll down and you see here current IV percentile 27. We want it to be a 15. Okay, so that's not good. Why? Because volatility can still drop, and that will hurt us. Okay, let's take a look at the Trade tab here. And what would I enter? Well, I'm looking at 90 days for the or more, so we will go to July. The strike price should be 175. So I right click here and say buy custom, and I find my Genie. You should have saved already a template. If not, just put together a front month short straddle and two back month short straddles. At some point we will show that. Okay, let's go to the Analyze Trade. And here you see the volatility is about the same in both. Actually, it's a little lower on the back month, which is good. And but this has been lower before. Here, it could go as low as 24, and then we will lose money. So be cautious about that. And Apple is right now at the edge here in my breakout to new high, so that will be good if you were having a position like this, because it will benefit from a move up as if the move is strong. Okay, so now the other thing to consider is create duplicate the how this stock is or isn't it liquid enough. The difference between those 2 points, and I think it's liquid enough, obviously, is Apple, which is a big company. Okay, let's copy this, and now we go to our spreadsheet here. Let me say, give me a second here. I'm going to move this here where we can see it clearly. Okay, I'm going to create a new spreadsheet, call it Apple and AAPL, and then I show you how I put my data in here. First, this trade, the trade there. You can fulfill all that. This is not necessary. This is for information purposes. How much it's going to cost us? Well, $29.05. So that's 29 is 2,905. Okay, if you duplicate that, then that will be close to 6,000. 3 of them will be close to 9,000, and that's probably okay. So we could do 3 lots. 3 lots is 3 shorts and 6 longs. Okay, just for reference. So 3 short straddles and 6 long straddles. Okay, and then we go and check the earnings. Okay, the earnings. right here, the past earnings wasn't long ago, but you can see that it was 188 was the estimate, or 1.9 versus 2.1. Okay, so we enter that here, 1.888 versus 2.1, and that gives us a difference of 11%. So it says trade because it's more than 10%. The stock has moved more than 10%. Yes, it has. Here, this big move here. Let's move on to the volatility skew. Okay, you can go to the analyze tab. This is a proposed trade, and we have the volatility here. Let's fill that up. The back month is shown first, 28.16. Note how I'm taking it here from the bottom right corner of your screen. 28.16, 26.69, and the shorts are 28.28 and 27.9. Okay, and of course it's negative, which is good. All right, that means that the front month is more expensive than the back month in terms of volatility. Okay, let's look at the liquidity, and that's create duplicate, and that's 28.98 versus 29. Again, we put it here in our spreadsheet. Here at the bottom right corner is mid versus natural, 29.08. $29.08 versus 29.4. Okay, so that's 1% is liquid enough. The only thing that is a problem is the current IV percentile, but I'm gonna live with it if it's the only problem that I have, because it's 28%. 28%. Okay, it's the only thing that doesn't work for me. You can put a color to that cell as to for remembering. I don't know why it's giving me this trouble. Okay, cell, and let's add the color here. Let's say orange. Okay, it says do not trade, but we have everything else in green that says to trade. So let's enter a trade. My account is 100,000, 101,000. So I can put this trade up to $9,000. Okay, so when I create this trade, let's unlock it. So we are going at the mid price, create duplicate, confirm and send, and then I said multiple so that I can count here. The account number is 15, so here it is. And the cost is $28.93. So I can do 3 of those comfortably, okay? One more, it will be too much money, so let's enter 3. Let's send that off. And that's our first trade in a while. Okay, let's move on to Akamai while we wait for that to fill. In the case of Akamai, it's moved very strongly, but the volatility is still quite high, but it's at 27. And the low point here is 10%. Okay, so let's go to the monitor tab, trade tab, sorry. And here we see that it's at 41%. That's way too high. I'm not comfortable with that at all. So Akamai is a no-go, even though everything else checks. The estimate was 1.144 versus the actual 1.49, so it beat by a wide margin. The trade itself, if I did that, it would have to go to August, which is far back, and the 115 by custom. Let's just show it for show, sorry. Analyze opposite. And August versus April, and you can see the price here. The front month is way cheaper than the long back month, so I don't want to do that at all. Okay, it's not a good idea because the skew is way too big. you can see that the volatility of the options that I'm paying is higher and therefore more expensive than the options that I'm selling, and therefore less expensive, and that is going to cost me in the end. Let's go to NTM, ANTM. Let's look at the chart. The stock has been moving nicely. The volatility is a little high, as most stocks are right now. So let's go to the trade tab, and we see it's 41, way too high. You can do the same evaluation. You would have to go to September for the options to buy, and 478, that's probably too expensive too. Buy custom, Gini, analyze the opposite. For some reason it's giving me the sell portion. Here it is, okay, and you have 30, 27. The volatility skew is fine. Create duplicate. The mid is it's quite expensive. It will cost you $11,000, so that wouldn't be. You can see by the price of the stock is way high, so that wouldn't work for us. Too expensive for this account. AVGO. We have traded this in the past, and we would be buying. Let's see what we would be buying. We would be buying not the June, July. That might be fine. Might be fine. July. And we will be saying something in April 14, April 22nd. That might be fine. About a month from now. And you can see the volatility. Yeah, there's a negative skew, but it's a positive skew, but it might be acceptable. Okay, let's look at the trade tab again. What is the implied? The 35. It's still quite high, but that's typical these days. And let's confirm and send. No, let's see what the difference here. Again, this will be $1,300, $13,000 is a little too high. Even if we did one of them, the stock is trading at 630. So if the stock is this high, it might be okay for a bigger trade account. This one has only allows about 10,100. AXP, I think I have a trade on that. Yeah, I still have a trade on that, so I don't need to do anything. That's good. Sienna. Okay, let's look at that. First, the trade. 34, still high. Let's take a look at the chart. It's coming down quite significantly, but it could still go lower. Even if it's going up, volatility, especially if it's going up, the volatility will decrease. So we don't want to do this. July, and let's see, 60. By custom, Gini, analyze that. 35, yeah, that's sort of tight. Let's see, create duplicate. That might be okay, it's about a point, might be too much. And the earnings came in at, yeah, let's do this for the exercise, okay? Let's take the trade, analyze tab, copy the trade here. Paste it here. Let's create a new trade here. Call that Sienna. Name it here. Should have changed the apple too. Let's go change it right now. The title here, AAPL, in case I need to go back to it. Okay, and what is the price of this trade? $13.98. So we put $13.98. $1,398 $98. And so yeah, we could do quite a few of them. Earnings came at 47 cents. The estimate was 36 cents. 0.36, 0.47. That's a 30%. That's a good beat, really good beat. So it's you'll be motivated. The stock could move strongly up. Okay. Despite the decline here. Let's move on to the volatility skew. Let's go to the Analyze tab, and here's my volatilities. Let's enter it there. The front month, the back month rather, is 35.95. You can see the right corner here, right bottom corner. That's what I'm taking, those numbers there, copying them in here. 34.61. Then we have the front month, 31.64, 31.5. Okay, the difference is too much. The volatility skews too much. Okay, and that's not good. Let's suppose we enter the trade, and you have the mid at 14.05. Let's see, 14.05. Look at the corner here. 14.05 versus 15.09. 14.05 versus 15.09. Again, too much. This should be less than 3%, and it's 6.9. So that means that it's not liquid enough. You're going to have trouble getting in and getting out. The skew could cost you money if it is too bad, too extreme. It ends up costing you money because the front month can increase volatility and the back month can decrease volatility but a 3% would be acceptable. 3.71 is not. The current IV percentile, you saw that it was too big. Go to the trade tab and scroll down, and you look for the current IV percentile. That's 34. It should be 15. And so no, we're not going to trade that. Okay, so do not trade, do not trade, do not trade. 3 out of 4, I can't trade that. Let's look at Humana, and that's a 40%. I am already turned off. 40%. The earnings came in at 124. This, about the same as expected. The stock had dropped significantly. I'm afraid to trade that because the volatility skew. The volatility is still a little high, 40%. Let's move on to Nike. As nice move up, volatility is declining still. We could definitely wait for it. So next week we could look at all of these trades and see if we are encouraged to enter a trade. These are candidates today, right? So we look at them next week. Oracle has been moving very nicely. The volatility skew is low. Let's look at the trade tab. Scroll down as 27. That's not too bad, okay, considering today's volatility being high. Okay, so the earnings came in at 1.13 and they were expecting 0.99. Let's do that for the exercise as well. Do I have any trade on it? Let's go to the Analyze tab. I don't have anything, so let's create a trade. Not committing just yet. The July would be 1.12. The strike price should be 90. Let's do the 80. I'm going to shy away from this 92.5 kind of, simply because I have found that not every month ends up hitting that middle ground. It's usually 80 and 95. So I'm going to try to stay with the whole numbers instead of the fractions. Keep that in mind for future. It's just that lately I have a perfect trade, and then suddenly that next month that I want to roll to doesn't have the 0.5, which is stupid, but it is like that. And then I have to make a decision of entering something that I really don't want to enter or are not comfortable doing. So let's enter the Gini trade here and analyze it. And this is for Oracle again, and it's in the 29. Yeah, that's good. 29. Oops, the shorts is too low. It's probably not good. Let's go to create for the exercise. Let's do that only, that portion only. Let's duplicate that and then enter Oracle ORCL and put this here. I might not come back to it, but let's see. Let's do the volatility skew. I think that will fail. The front month is 25.3, 25.91, and the back month, again, the number right here in your bottom right corner, 29.06 and 28.42, and yeah, it's a little over 3%. Not too bad though. It's yeah, okay. I might be motivated to still do the trade. Let's see. Let's look at the earnings. Okay, 9.998. Expected was 0.998, but it actually turned out to be 1.13. So they beat expectations. That's 13%. That's good. Not too strong though. It's good, but not strongly motivating. If not all the items here are good, I don't feel too motivated. But we can wait until next week and see if those things improve. Okay, let's say create duplicate order, and here's the mid versus natural. Here at the bottom right corner of your screen, that's the mid versus natural. That's the price, the asking price. Let's go to the item here, liquidity. Mid is 14.95 versus natural 15.43, and that gives me 3.1%. Yes, borderline, and these do not trade. So I'm going to check this out next week. Okay, I have several candidates. I might come up with new candidates as we go along. Let's delete the ones that are not. Consider the other 4. I already entered one trade. It hasn't filled. Let's go to the monitor tab. It hasn't filled. The price has gone up a little bit. Let's adjust that. So cancel, replace, unlock it, and send it. Just so that we get the price. All right. Let's increase it again. Just increase it a couple of points. You'll be amazed how quickly these things get filled. Okay, so let's keep that for now. Cancel, replace. I'm gonna change it to 15 and leave it alone and see if it'll get filled. If it doesn't get filled by the end of the day, I will increase it. Okay, let's look at our other positions. We have positions on AXP and TER. Let's say current account positions. Okay, so the Apple is being traded. AXP, let's look at the Analyze tab. That's looking good. I don't think I want to change anything. If it was over 200, I would sell calls. If it was below 170, I will sell puts. I don't need to do anything right now. The expiration is April 22nd. There is plenty of time to go. And then we have this TER. The TER, we have just leftovers from previous trades. These are just way out of the money, 60 and 70. Can't believe the stock at some point was that big. But obviously we rolled them up at some point, and now we have those worthless calls there. I doubt very much that it would ever see 170 before these options expire, which is in April, for only a few days away. I couldn't even sell and get any money out of that. Okay, it's zero value there. So they're lottery tickets. They don't bother me in any way, but they're there. Okay, and that's about it for today. You can trust that I will keep track of my trades more carefully. I know what happened last week was shameful. I had been too busy and ended up having to rush and clear the account. But nevertheless, we have a good price. That was the Apple trade now filled. And as you can see, the market value is 87 $145. Good. Big winners this month so far, this year, so that's good. All right, that's all for today. Thank you very much for joining me and see you next time. Bye-bye.